No, I'm not in the enchanted forest. This is your morning jolt. I'm actually hanging out down on Wall Street, just taking it all in. But I got a couple things you need to know to get your market day started right. First up, FedEx in the absolutely terrible, ugly, just not a good quarter from them. And from an investor standpoint, you need to be thinking about what a quarter like this means. I mean, the company missed by 34 cents. It should tell you that Wall Street remains too ridiculously optimistic in their profit forecast for the back half of the year. That is the blunt reality. The FedEx called out they're investing in employees. They're going to pay their workers more, as if that's a bad thing, but it's one of the key reasons why they missed on earnings. And you look at what 3M told us last week, that higher commodities costs are going to impact their earnings more than they thought. You're really starting to get a picture painted before third quarter earnings season at the end of October that, hey, you know what, Wall Street might just be too optimistic on its profit forecast. They need to come in a little bit, and as a result, stocks might need to get a little bit of a haircut. And I've been getting raked over the coals the past couple of weeks on some of these bearish calls in the market, but I mean, listen, how are you going to ignore a company like FedEx and then also even 3M? These are industrial powerhouses. They're telling you their earnings didn't meet profit forecasts. Pay attention to it. And then lastly, I was looking, not on this topic, I was looking at Goldman Sachs. I was looking at a note that I got from Chief Strategist David Costin yesterday. He says stocks are looking a little bit overvalued. And I was looking at the metrics he was using, about 8-10 different metrics. It makes sense. I mean, again, go back to what FedEx and 3M just told you. Let's see, data dump. I'm looking at staying on the bearish theme. Why? Because that's just what I'm working with the past couple weeks. Bank of America Merrill Lynch new fund manager survey said about 24% of investors surveyed expect global growth to slow in the next year, up from 7% in August. Also, cash positions among those surveyed also increased in September versus August. Another little bearish signal on the market from them. And then around the street, last night I caught up briefly with Shake Shack CEO Randy Garutti. They opened a new innovation kitchen in Greenwich Village, New York City today. That actually opened today. They gave the media a sneak peek yesterday. He took us into the test kitchen beneath the restaurant. They're testing a lot of cool items like lobster. They're bringing out some new chicken bites. At the end of the day, I think Shake Shack, and I'm going to keep this vision. I've talked to Shake Shack since day one of the IPO. I remember when they started as a hot dog cart in New York City. I think this is a private company at some point. They are just, they're very focused on methodical growth, making sure the customer service is right. This is not a normal fast food company. And as a result, I think it would be a great addition to the portfolio for Inspire Brands. Paul Brown, I know you watch you watch your Morning Joe religiously. Give Shake Shack CEO Randy Garutti a call. And then we got, speaking of staying on the CEO front, our Annie Gauss, tech reporter extraordinaire, she spoke to DraftKings CEO, and DraftKings CEO told her that a potential IPO may be in the cards in the distant future. So it's coming. You can bet on it. You got that? Sign up for the Morning Jolt newsletter down below. It's free. So why don't you want it coming right to your email inbox? I'll see you guys later.